Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for February 27th, 2023. We are recording this at 1 p.m. Eastern Time, and this is episode number 378. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have arranged for Sonny Harris and Michael Filighera to join us again. And the option professor is back to moderate, so I'm going to go ahead and turn it over to him.
Okay, great. And we got a lot to talk about here today because obviously the markets have quite a bit changed in the last couple of weeks. So we're going to talk about that very much. But today we have two guests with us. And before we get into everything, let's introduce ourselves. So Sonny Harris, a little background on yourself and what's going on at Money Mentor.
Thank you very much. I'm Sonny Harris. I'm a mathematician, programmer, and trader for 42 years. I love to do mentoring and tutoring and consulting, one-on-one coaching. I'm also a custom easy language programmer if you have something you need built in TradeStation. And I love to do testing, so programming strategies and testing them to see if they work. I'm author of 7 best-selling trading books. Well, one of them's not a trading book, but 6 of them are. I do Sunny Side of the Street newsletter every Sunday night. I have a live trading room on Tuesday mornings. And we've done a number of live free forums on technical analysis and easy language and strategy testing. I love to teach people how to trade. Thank you, Jim.
Excellent. And also, as I said in my invitation that I sent out today, we're going to get into your Sunny bands and also and also the attractors and things like that, which I think, are very unique to yourself,
Thank you.
Yeah. Michael, a little background on yourself and what's going on at your company.
Good morning. Good afternoon. My name is Michael Filighera. I am the proprietor owner of TradersHelpingTraders.com and also LogicalSignals.com. I have a trade room, which I am revamping, so to speak. And I'm now working together again with my first Elliott Wave teacher, and that his name is Dan Ascani. He and I have done a lot of publishing together and a lot of other things together. And now we're joining forces yet again. And so we're going to be doing the trade room together. And that's going to bring a whole new layer to what we do with terms to day trading. I also have 2 channels on YouTube where I produce the Eye of the Storm podcast and then also daily Elliott Wave updates. And those updates include the NASDAQ and the S&P futures. And then once a week, I go over the big picture, which again goes to the cash markets, the treasuries, gold and silver, and the dollar.
Okay.
I also do coaching and other sundry things.
Yeah, we are also going to hear from you on the Fibonacci numbers and the Elliott Wave sequences. So that's another thing that we were talking about that we're going to bring to the table here today. So that's great stuff. Let's start out with our Monday morning quarterbacking, I guess. I don't know. We started today at a 40-10 ballpark figure on the S&P 500, 40-10. And the question is always, what are we going to end up on Friday? So we're going to be higher than 40-10, lower than 40-10, or somewhere, just around flat. So we'll start with Sonny. Your opinion on where we're going and your confidence level.
Well, I think we're going down into the 3900s. I'm more than 50%, but not more than 60% on that one.
Right. The preponderance of the evidence, but not overwhelming.
Right.
Gotcha. Okay, Michael, what are you seeing as far as up, down, or sideways here?
If you would have asked me first thing this morning, I would have told you likely up, but I think that it may have already completed itself. I was looking for a bounce. I think we already got it. Mm-hmm. So I am going to join Sonny in saying lower.
Okay.
My confidence level on that?
Yep.
Because the markets are so crazy, but I'm going to go out on a limb and say 65%.
Okay, so you feel a little bit confident that we're going to roll over. Sonny, I know a lot of the stuff you look at are technical, so why don't we throw up your Sonny bands and you can explain your reasoning on why you think the market might roll over from here, and also give a little brief background on what the heck Sonny bands are all about, that kind of thing.
Nope.
Yep.
You see it?
Yep.
We see it.
All right, so the green lines on the outside form a channel, and those are sunny bands. The blue lines to the inside of that, that's the green lines are the outer bands, outer upper and outer lower. The blue lines are the inner bands. This is upper inner, lower inner. And the gold and purple lines in the center are my dynamic moving average. And I created that many years ago to avoid whipsaw. And you can see, right, for instance, right in through here, this thing doesn't whipsaw. It stays in position and waits when there's sideways movement. And that's what that's for. And what I do is I trade up to the top band, back down to the bottom band, up to the top down, back down to the bottom band again. And this is why I think the S&P is going lower. I think it's going to head down a little lower for this bottom band. You can see that right here, the bands, the dynamic moving average is trying to cross. It's still gold on top, but it's trying to cross. And you can see that echoed in the histogram below. It's working its way down below zero.
And below zero is definitely into the sell zone, huh?
Yeah, below zero is in the sell zone.
Now, this
Actually,
time frame here is a
This is
relatively
daily.
short. What is it?
Daily.
Oh, it's a daily. Okay, so it goes back quite a bit of ways.
Mhm.
And so if you were trading like sometimes you talk about day trading, would you use a different chart to give
Oh
you the
yeah.
idea? So why don't
Oh
we
yeah.
talk about something like that? Because some
Okay.
people
Let
do
me,
like to.
can I real quick show you that right there is the sunny band cell signal. Can you see this yellow dot and that
Yep.
where the cursor is? That's the sunny band cell signal. So you see how successful that was.
Yeah.
Let's
Yeah, the reason I'm saying let's go to the short time frame because the explosion of volume in options that are either 0 days to expiration to 1 day to expiration indicates to me that there's a whole lot of people out there speculating on a very short term basis. So
yeah,
what are you showing on the the
on
short?
the 5 minute, here's what we have.
Mm-hmm.
So it looks like on the 5 minute for the next few minutes, it's going to try to go up to this inner band.
I got you.
I don't know what's going to happen after that. I mean, I don't have a crystal ball. I've got a little magnifying glass, but I don't have a crystal ball.
Right. But it
So
looks like there is a little bit on the day anyway, a little bit of momentum that
a
hasn't
little bit of
broken.
range right up and see
Yeah.
here's where the buy signal came in, where this green purple turns to green on the histogram.
Yeah,
That's a
yeah.
buy signal, and it
Yeah.
was confirmed right there. So
Mhm.
we have to sit tight through this little recheck over here, and
Mhm.
it's still a buy signal.
So if somebody was watching this, they might have, got into this thing around the 39.90 area. And then basically, they may want to ditch this thing if it gets under the gold, which is around 390.96.
Mm-hmm. And you can see that the last tick right there just started up a little bit
Yeah.
more.
And then basically, if you're looking for some resistance, 4,000 to 4,004 would be a couple of levels where it could have some resistance.
We've got resistance right here and right here.
Yeah. So, I mean, that's how you kind of take this information and turn it into some activity, right?
Right.
I got you.
And right there's the sell signal. You see this blue bars going up. There's a yellow dot. There's the sell signal right there,
Yeah.
confirmed on this bar.
So this is the 1 day.
Oh, I don't even know if we have 1 day there. Let's real quick add the study that'll tell me.
In other words, or is this just for the last couple of hours?
Well, I don't even know yet. We'll know in 1
California,
second.
4 a.m. Pacific to now.
Okay, the blue and red bars are the opening of today.
Okay.
So right there's the open of today, 6:30 a.m. Pacific.
Okay. So that gives you your starting point, and then basically you get the rollover at around 40.20, and then you get a little bit of a buy point around, I mean, if I'm looking at this just as a novice, it looks to me like a reasonable sell area around 40.20 ballpark, and then basically a reasonable buy area around 39.90, let's call it. And so there you go. You got 30 points right there. Nothing wrong with 30 points.
Yeah, and we've got what's this 04 to 20. So we got 16 points here, and then we got 30 points there, and now we're long again.
I got you. And people who contact you, you can help them, put this into their research every day.
Oh yeah, yeah.
Well, like I say, that's to me, that's shall we say, a real a usage of this information. And of course, there are times where it gets choppy, I guess, and
Oh, yeah.
sometimes, yeah, so it doesn't work as well unless you get
Well,
it in. Yeah.
it's not all wins. There are losses. That's inevitable in trading.
Yeah. Like today, would you call today this activity we're seeing here rather orderly or
Well, this looks like a typical day. I mean,
okay.
Tuesdays are usually the worst. They get kind of choppy, but this is a nice up and a nice down, and then we're going up again here.
Yeah.
So that's beautiful day. There's
Yeah.
usually 3 to 5 trades a day in the swings in this S&P.
I got you.
So
Okay.
we've
And this,
already had
yeah, I
3.
get you. All right. So this is like a real world kind of look at it, and it does look back. So obviously, when you're trying to make a decision on something at 40/20, you don't have the shall we say the advantage of seeing the rest of the chart how it panned out. So
No, you don't.
and when you're getting a signal down at 39.90, you're not privy to the remainder of the chart that happens
No,
afterwards.
absolutely not. Just like right now, we don't know what's going to happen before the end of our talk here today.
Exactly. So it'll be interesting to see. But right now, it does look like obviously there is a little bit of momentum to the upside. So,
And
um,
you notice I don't have volume on this chart anywhere, so I don't know who's trading.
now the
What
thing is after you do get the signal at 40/20 ballpark figure, because I like to see these lines pointing down before I believe them. I like these lines pointing up before I believe them. So that's why, I would, this is just my personal opinion. I would be more interested at 40/20. So then you get the line starting to go down, which will give me confidence that I might be into something good. And then once it starts really getting above the green, since you have a profit there, even if it's a false little buy, grabbing a profit's not going to kill anybody.
Nope. You never go broke taking profits.
Right. So in this particular instance, even though you don't see the rest of the chart, once it starts violating or supporting, and you start seeing these green things either stabilizing or turning up, that might be enough for somebody to say, take the money and run.
Yeah, I'm told I have ice water in my veins. I wouldn't take it at that point. Purple's on top. We're moving down. It violates this, but it doesn't violate the dynamic moving average. So I'm still in there at that point.
I got you. So you, and everyone's got their own personal opinion and their own way of looking at data and interpreting it, and then doing what they feel comfortable. That's the whole beauty of individual trading. But in your opinion, if you were on a sell position at 40/20, your first cover idea would be more like 39.95 or 30 or 4,000 when it actually took these purples and gold and turned them up.
Yeah, right in here is where I would have bought back in.
Okay. Oh, so when the blue bar hits, that's kind of a thing that something's turning as well, right?
Yeah, that tells me.
I got you.
And the green histogram on the bottom.
Okay.
It's
like I say, I don't know how many people understand what you're doing here, and I'm just acting as if I'm the guy who fell off a boat, which is who I am right now. And so basically now I'm getting into your head, as they say.
Yeah.
And basically you're saying, so if you got onto a sell thing, you'd want it to get above the green line. You'd probably like to see a blue bar, and then you'd like to see your bottom area hit a green line.
Exactly.
And that would be 3 darn good reasons to take the money and run.
Yep. And look where,
and whether you're wrong or not, and then basically you go to the sideline and you kind of assess how the thing's going to trade. Maybe you give it a half an hour and you start seeing the blue followed by another blue, and you start saying, this thing at 39.91, 39.93 is starting to look like a turn. So if you want to stick your head in the oven again here,
and look right here, what's happening.
Yeah.
While we talk,
like I said, yeah, to be honest with you, as I was, that's why I said it did look like it might go to those attractors. Then that's what the attractors are. So, people who hear you say the word attractor, you're saying these bands are what you believe to be somewhat of an attractor, and you're seeing some evidence of that now.
And I draw horizontal lines and call them attractors, and trend lines. And look at this one. See here, it hits price here, hits price over here, tries it again over here and stumbles. tries it again over here and breaks through it. That's an attractor. It's attracting price to it over and over and over again.
Yeah. Yeah.
Here's
And the
another
fact, okay, here's a question for you. The data on the bottom you call what?
histogram.
Histogram. Okay. Now
Mhm.
I can see the histogram lines are getting different
Shorter.
shapes. So
Mhm.
if they
Shorter.
get shorter, does that mean is it a little bit like relative strength? The market's running out of steam?
No, this means it's going to cross over the zero line and go on up higher.
Oh, I got you. So the shorter the bars get, the closer you are to actually getting into positive territory.
Exactly.
And if you get into positive territory, that's a more confirming idea that the market's rising.
We're going on up.
Okay.
Yeah.
And again, as I'm looking at it, between 4:30 and 7:30, the fact that it's above the zero line means that it's a generally positive market, and it was, correct?
Right in through here, that's positive.
And then, okay, so you got a couple of things to interpret here. You got the green versus
Purple.
the purple, and again, what's the difference between the green and the purple again?
Okay, purple says that the purple line of the DMA is on top. Green says it's changing to buy direction. So it's still purple on top, but now it's looking at trying to buy.
Okay, so purple on top of green means that the trend is kind of down.
Yeah.
And the green getting back above purple is telling you there could be a sea change.
What's gonna, yeah, if that goes above the zero line, it's gonna turn gold.
Okay. Now
And
the
that's
thing
coming.
is I see one purple bar in there. Is that just an anomaly or something? Or?
Yeah, well, it's clearly saying that the market's moving down on that bar,
Yeah.
but it
And
turns.
oh, I got you. So it gave you that bar because it made a little bit of a new low or whatever it did there.
Mhm.
And so,
Exactly.
but then that was reversed so quickly that boom, you went right back into the green bars.
Correct.
I got you. So
You
there is a
bet.
lot of data here, but
A
you're
lot
trying,
there.
yeah, you're trying to, what do you call it? What you're trying to do is interpret the whole situation, and you're using the data, to make a final decision. And so you wouldn't just look at one thing only. You would
No.
you'd use it as a soup, and a soup with a number of ingredients. And then once the ingredients all seem to be coinciding a bit, maybe then you have a more higher confidence level of what it's saying.
Yep. I do like soup.
Yeah. Well, no, that's what it's all about. You know what I mean?
Yep.
And like I say, there's not that many things to consider here.
No,
But
there really aren't.
that's where people calling you up and having a session with you would make sense, because a guy who's just off the boat looking at this thing, it looks like there's so many things to consider, but in reality, there's not that many.
Well, and I give free trials. I had a guy call me asking when my latest book was going to be published,
Mm-hmm.
and it wasn't ready yet. So I told him it's not ready yet, but would you like a free trial of Sunny Bands? He said, no, that stuff's so complex, I can't use it.
Yeah.
I said, well,
And
let me.
I don't think it's that complex at all. Once
No, it's not.
once
And
you
I said,
slow the
let me give
music
you
down, slow the music down and
right.
you relax, take a deep breath and relax.
And I
just
said, let me give you a free trial and I'll walk you through it. So I walked him through it. And then before the 7-day trial was up, he'd made $11,000 on Sunny Bands.
Oh, great.
So he decided he liked it.
Yeah. Well, I mean, I can see there is a possibility of catching some nice trends here. And like you
Yeah.
say, in full fairness, it's not going to work on every time. But,
Right.
if you do risk management, which is what the whole investing game is all about, and you let these winners ride, you might be able to, obviously be fortunate enough to get a nice trend.
Yeah. And well, obviously the hope is to win more than you lose.
Yeah. And hopefully you'll get it. Like, in other words, this is a fairly orderly up and down. Sometimes it's not orderly. That's obviously where you're going to get chopped up a little bit. Happens with every system.
Absolutely.
But sizing of your trading, obviously very important. And of course, exit strategies are very important. And sizing and exit strategy probably are two of the biggest factors on trading.
Yeah.
Because a lot of like somebody might get excited with this and go, oh, what a great sell signal there. It looks like for sure, I think I'll do 5 times the normal size.
Yeah.
And then
No.
the next thing you get whacked and your account goes way down. And then the next thing you say, Sunny Bands doesn't work. Well, it doesn't work if you're crazy. Yeah.
Right.
Yeah, we can't.
Steady as she
We,
goes.
we
That's the
can't.
rule.
We,
Steady as
we're
she
not
goes.
psychiatrists down here. If you have, if you have certain things going wrong there, it's going to be a problem. So, yeah, I think if you concentrate on sizing and discipline, and then you can stick with it for a longer period of time, there's probably you got some evidence that it can be a reasonable tool, huh?
Yes, I've been using it for 36 years.
And you're still in California, paying $5 a gallon
Paying,
for gas, so that's a good thing.
yeah, paying California taxes and income tax and all of that.
You haven't had to
$1 million
move to a
house.
condo in Idaho in the woods. You haven't had to do that
Right.
yet. So
No,
that's
no,
good.
no, no. I'm staying in California. I love California despite her faults.
All right. Well, we're going to get into other markets here pretty soon, but we're going to turn the stage over to Michael. He's going to put his stuff up there and kind of explain how he's seeing the markets and maybe help us with some Elliott wave information and Fibonacci numbers and things like that on the S&P. So, Michael, can you share your stuff? There
Yep.
you go.
It's on there.
All right. So, Michael, your time here. Let's explain where you think this S&P is going and why it's done what it's done and things like that.
Well, I'll jump up to the daily chart. Actually, I don't need to. I can just go to my 4-hour chart. And you can see that, well, let me start one higher.
If you could go show what the 1 year is looking like, and then we could condense it into that short-term day trading crowd.
Let me go to that 3-week, the weekly. So there was the all-time high in the S&P, and that was on January the 3rd, 2022. And from that peak, the market has been involved, the S&P, along with all the markets, have been involved in a long-term corrective process. How it all fit in on an Elliott wave basis has switched around a little bit because we're hanging out for very long periods of time in one area, like right in here. Months on end, we're right in here. So on an Elliott wave basis, what we're now doing is a double ABC to form the initial primary degree A wave down. So within that, here's the first ABC, there's the X wave, that's the intervening move. And that was actually that took us up to the August highs. Then we start down again in an A. We just completed a B. I'm going to drop this back down to that daily. And that B wave actually ended in a failure. And what I mean by that is this high, which was at the beginning of February for the S&P was 41. What was that? 4208. And then, so the expectation was on this high, which was 4180 or 4186, the expectation was that as a fifth wave, it would go over and top that and then start to come down. But it didn't, and it ended in a failure. Now I'll go back down to the 4-hour chart and we can see it even more cleanly. So off of that, because of the failure, we dropped quicker. But to get confirmation of that now on an Elliott wave basis, what I look for is an initial 5 waves down on my 4-hour or 1-hour chart. I'm going to drop it down one more. So now we can look at this interior. So this is what kind of happened. Now, the market held on to this thought that, the Fed's going to pivot and everything's going to be rosy and interest rates are actually going to start, they're going to start not raising at the same rate, et cetera, et cetera. So last time we got that 0.25 or 25 basis point hike, and that just got everybody excited. But at the same time, the Fed was basically saying, please don't get so euphoric about these rallies over here in the equity markets. And governor after governor was basically saying the same thing. Occasionally we got one who was a little bit more dovish rather than hawkish, et cetera, et cetera. But the underlying message was truly being ignored by the equity markets at their own peril, I might add. And so when we finally got the PCE data from last Friday, which instead of showing any improvement, showed that inflation was stubbornly high and had gone back up 0.6%, that just kicked it right into gear to kind of come down and finish this initial 5 waves down. Now, being that I'm in a larger decline, I am expecting that the market will ultimately finish this C wave, which is on an intermediate degree, downwards. It's going to be like 3,000. And so I took off all of my larger downside fibs because I'm working inside this wave, and you get too many lines, it gets confusing. But safe to say that now that we've finished minor wave down, minor wave 1 down, we're in a minor wave second wave. So then that's when I turn over to Fibonacci and I start to look at what the relationships are in terms of the retracements. And that's what these are. These are representing Fibonacci retracements. And the most common retracement for a second wave is 50% to 62%. So that brings us back up to here. But now I add into that the current atmosphere is starting to switch around. And that's courtesy of our treasury markets, which have now also kind of taken it a little bit more seriously as the curve continues to get more inverted. And what that is suggesting, or what that means, is that the short end of the curve is moving faster and rates are raising higher, going quicker than at the long end of the curve. And that presents a problem for the 30-year bond, because they're trying to price this thing. They're trying to find, where can we price this, because it is a 30-year bond. And so we're seeing a lot of volatility in that 30-year bond as a consequence. Now, back to the S&P. We may have completed this minor 2 because all I'm looking for is what we label as an ABC. And while it's not totally visible, I can make it out a little bit. And that this was definitely like, an up and a down, so an A and a B, or this was AB, and this then could be the C wave. Now, I'm going to give it the benefit of the doubt that it's likely not complete and that we still have an up leg to do. But this could be A, and then we get a B wave down, and then we do a C wave up. Now, is that B wave going to take between now and Friday? No, I don't have a clue. So, or I don't have any definitive answer on that. I do have a clue. So, but what I will be watching for is to see it come down, hold, and again, I can put some additional fibs if I'm just looking for a B wave. I'm just going to put it right there. And here it's now coming back to say, well, this decline has held a 50% retracement. So that's from Friday's lows to this morning's highs. It has already retraced back 50%. So coming down to 62% seals the deal in terms of, wow, we should have completed an internal B wave, and then we're going to do 5 waves up. So again, if they can get that done, let's say by Wednesday, then wherever this thing ends up, I'm expecting it to come back down, and then I would say lower. That's why I say lower than 40.10. But to be more definitive about it, you really can't, because of the way the market is really trading and moving around. And a lot of that goes to exactly what you started with, Jim. And I said, it's how appropriate to bring that into the conversation, because it's something I think people really need to understand. And that's those 0 DTE options. And what you mentioned was incredibly accurate, that how the volume, in fact, I think it was last Thursday or Friday, 42% of all the options volume was in DTE options.
Well, I'll tell you, one of the reasons for that is obviously with interest rates being where they are, people are putting their money and earning interest, and they're taking that interest money and gambling with it. That's number one. Number two is let's be honest. I mean, if you wanted to speculate on a short-term basis and you go in there and you do contracts, this thing could gap on you and you would have all types of risk. So if you're doing a 0 or 1 day type trading, it makes some sense that people would use the option. Yes, your break evens are going to be lousier, but you're going to know what you're betting, and you're going to know what you're betting. If you're buying the options, you're going to know what you're betting to the penny. And you can't say that. I mean, you could buy a contract here, and especially if you wanted to do 0 plus 1 day, because then you have overnight risk. Right, and exactly. So the bottom line is there's a good reason why the volume is screaming in these things. is because, again, the risk is limited versus the surprise where you'd lose all kinds of money. And secondly, there's extra capital to gamble with because the interest income on their accounts is so much higher than it ever has been. So those are the two reasons behind it. Anyway, you were
agree
saying
with you on that one. And what I would add to that is that, and besides retail, we have the large trading firms, hedge funds, everybody else. They are coming in size, and they play it down to the wire on where they're going to put this expiration at. And we saw that last Friday, and we saw it again on Thursday. And they're both, zero DTE expiration days, because if we look at it in the S&P, in the SPX, and the ES, there's an expiration every single day, Monday through Friday. And so that's added a lot of different dynamics to how these indexes trade, how Elliott's actually getting counted, what it does to the actual wave patterns, et cetera. So it becomes a very interesting picture in the long run. But I will say that, again, when we just back out a little bit into a little bit larger picture, it really puts a good spin on intraday trading. And so there's a lot of opportunity there. Again, also with the zero DTE options, and primarily based on exactly what you're talking about. And then when I put it into just trading the future, they go hand in hand. So I just think there's a lot of opportunity, and intraday can get squirrely, as we saw on Sonny's chart for the Sonny bands. But if you have a methodology and basically what your turns are going to be and how to trade them, the opportunities are tremendous, So I'm real glad that you went into detail with Sonny, because it's telling you right there. As long as you know how to read it, it was telling you much cleaner than, I will say, even my chart. My charts
one of
tell
the
me.
one of the problems with the Elliott wave is obviously it's an interpretive thing. And that means you're going to have people who interpret it a whole bunch of different ways. When you're using something like a Sunny Bands or a moving average or something, you don't have to put it in front of a debating society sometimes. That's why what is the Fibonacci numbers, if we can switch gears? What are the Fibonacci numbers telling us as far as targets are concerned? Because I always thought that's very interesting. In other words, I was very
short term.
Well, let's just use the 1 year.
Okay, so let me go. I need to take a couple of these off, though.
Because as a simpleton, I was looking at 48.10 as the high, 34.91 as the low. And so if we did break 4,200, I was coming up with 43.07 as a 61% or 62% throwback rally. So that was my target if you could get through 4,200, which it had not done. And now
I'll show you how you would come up with that.
Now, what happens if you go all the way back to your B wave?
Right, exactly.
And go down to your A.
Right.
And so have we already got that correction up?
There we go.
Yeah. There's your retracement.
Just had that. It's just now.
And now
so that was why it stopped there. That was why it stopped at 4,200 and change.
Yep.
Right, but I got one better. I'm going to go do another one. So I'm going to take that one off, because you can, as you're going through this process, right?
Yeah.
So when we have this one, and I'm looking for a C wave up, now I can use extensions, and now I can start to zero in on it. And this is what I do. I layer my fibs as these things progress. Now you can see that, well, 4,200, which is what the retracements were showing me, but I'm refining it, because now, again, it ended in a failure. But prior to that, I had numbers going all the way up to 44.
Well, yeah, but that it had to get above the 42.07, which was the
61.8.
Yeah, I mean, so obviously, if you're trading, say if you wanted to turn this into switch from philosophy to action, the 42.07 number with a 61.8 number was definitely an area to do all those things like trimming, selling, whatever you do, buying puts, doing collars, whatever. That would have been the neighborhood to do it. And that also coincided with a moving average that I had, a 24 SMA on my 20-year graph, which was right on that number too. So there was obviously
there was a lot there. You're absolutely right. There was a lot surrounding between 4,200, 42.07, 42.09.
Yeah.
There was a tremendous cluster there.
Yeah.
So I agree with you.
And
It's
then
like,
once you broke under 41.27, 41.41, that was kind
Yeah.
of an indication that that's it.
it failed
Yeah.
on an Elliott basis, right?
Yeah.
It failed because that 5 failed to take out the high of 3. So we had a failure. That, and once you can recognize that, now you get an understanding. Is like, everybody else is recognizing it too, and going like, crap, and everybody's going to get out. And we did. We got some stronger downside.
All right. So if we take the low of 37.85 and the high of 42.08, what would be a 61% pullback? And maybe that's and also you've got the 50 and the 200-day coming in there. And so what's the number? I think it probably stopped about where it should, maybe. So where are we on the
I got to hold on. I got to switch it back over to retracement. It kind of did.
Yeah, 39.48.
39.48, and we've got
and that's where the 50-day average is, I think, too, or the 200-day. One
smack it right. Well, the 200 SMA is right there, smacking it right on the nose.
Yeah. Yeah. So there's a reason why it's bouncing. And like I say, when that gets taken out, if that gets taken out, then that would really be a serious blow to the market. But since everyone's leaning to the downside, and sunny stuff is turning up, and this thing is saying 39.50 could be the bounce low. You might be careful being so negative.
Well, but the other thing is, it's like, try to remember as well, put it into the time frame of which you're trading. 39.50 is holding for today, and we're getting a bounce off of that. But now we're already reaching resistance levels. So it could
what
just
about
turn.
Okay, what about 42.08 minus your 39.48? What's the bounce up 61%?
See, now you're talking.
Well, I'm a lay guy. I'm a lay guy, which I'm sure everyone out there.
No, but it's okay. But you're.
But I know how to do trading.
You're a quick learner. So here again, we're coming back up, and now we have those additional numbers that I was talking about before: 40.66, 40.80, 40.85, and then you get something on the top side at 41.13. So again, as we still do these, we still get that 4,100 level coming back in. And so people say, well, can we get above 4,200? It's like, nah, I really wouldn't be looking for it right now. So it's just trying to get an understanding of what the market is doing and what it's capable of doing. Is the market capable of going back above 4,200? Of course it is. But then you have to put it into what reality is telling you right now on what's really jumping in and controlling things. And that is, again, going back to what I call my pecking order. And what sits up at the top are interest rates. Whatever happens in interest rates rolls down and affects everything underneath it, which of course are treasuries, currency, equities, etc. Everything rolls right down and goes through everything, and everything's affected because interest rates are our cost of carry and our cost of borrowing and our cost of what we receive if we're lending. Yeah. So that's what gets, and it's all money and it's all gets priced in. Yeah. So important.
Longer term, the two things that are most concerning to me, not concerning, I just think they're going to kill the market, is the Fed funds, I believe, is going to have to get above the CPI number. So that means there's a whole lot more rate hikes to be done, or this inflation is going to have to tank. And anybody who lives anywhere knows that everyone's out there spending a bunch of money. So looking for inflation to tank is probably going to be a tough racket. So you got an interest rate situation that could have a lot of runway because it's got to get above the CPI. And the second thing is M2 money supply, which exploded last year or the year before, 25% higher, the biggest explosion in M2 between 2019 and 2021, and now it's negative. And it's very possible it's going to have to go as crazy negative as it did crazy positive to get back to a neutral. And if you and asset prices, in my view, have a very difficult time staying up if you got the Fed having to continue to hike and if you have the money supply growth tanking. That's just not the environment where, gold goes to 3,000 and, stocks go to 4,800 and your house goes up 35%. It just doesn't seem like the environment, so that's why, whatever it's doing now, I always tell people, save for a rainy day, because, if we get a slowdown in 3 months or 6 months or 12 months, it won't matter if you don't have any liquidity to take advantage of it, One
thing I want to bring to everyone's attention, but also just share with you, because you are focusing on Fed funds, which I think is important and right in line with what we should be doing. Have you taken a look at the September Fed Fund September contract? Notice everybody else is up 0.05 of a point.
Yeah.
But we got August and September lower. So the quick route is that normally you take par being 100, subtract 94.595. That's your rate of what they're targeting.
So,
what they're
so
kind of
essentially
building
you're
on.
saying by the end of the summer, they're looking for the rates to back off.
No, they're looking for rates to continue.
Yeah.
to
Like
go
I say, they
higher.
got to get above the CPI, and the CPI doesn't look like it wants to get to 4% anytime tomorrow. And so the bottom line is that that means the Fed funds, has to go into the fives. And if the inflation stays at 5 or 6, Fed funds has to go into the 6s or 7s, and that's
Right.
why this market is so mispriced. If in fact that's going to materialize, the only saving grace would be all of a sudden inflation goes down to 3% out of the blue, and then obviously they're done hiking. But there's no evidence of that now.
There's definitely no. But what I'm trying to say is that basis August, they're pricing in right now 5.4%.
Yeah.
And September, we're honing in on 5.5%.
And that's only if 6.5 CPI goes into the 4s. And like I say, I mean, I live in a travel and leisure city here, and everything's packed and everybody's going nuts. And my buddy who lives over in New Jersey, New York, everything's packed, and the guys in California, sunny, those highways are jammed with people going and doing something, and it has to do with spending money, probably, right?
Yeah.
So
San
these
Francisco,
guys,
they're shopping.
Actually, it's really silly to think that you can increase the money supply between 2019 and 2021 up 25%, which is like 5 times higher or 3 times higher than it ever was, and then think you're going to normalize this thing with some interest rate hikes and just bringing the money supply down towards zero. I mean, it just seems to me that it, because the amount of money they circulated, it just doesn't go away overnight.
No, it definitely doesn't. But I think that there's a couple of ways. One of them is, of course, they just try to get it off the balance sheet by buying it back. But the other thing is that they can debase the currency. And that if we go into a period of deflation or a recession, well, debasing the currency is going to take care of that part. Because that's what we'll see happen. Inflation, we'll see the dollar climb. Deflation,
That would be a very sad state of affairs if they have to do that, though.
But then again, it was just a sad state of affairs for them to continually pump in trillions of dollars into the money system.
Well, it was an overreaction to the COVID crisis, is what it was. They saw a crisis. I mean, they see a crisis, and they just went nuts on printing money and making money available and sticking checks in people's mailboxes, thinking that the whole thing was going to collapse. So it was an overreaction to the COVID crisis.
That's true. One other one I wanted to show you, Jim, was that if we're looking for a C wave down, I want to give you the initial projections that I have, and I'm going to take it from the failure level because that would be proper. If this C wave were to be equal to that A wave, which is its closest relationship, we're looking at 3361. Where I have stronger support, though, is right here, 3045 down to 2980. And that 2980 number is a fib number that connects the 1932 low to the 2022 high. And that would be a 38.2% retracement of a 90-year rally. And that comes in at 2980, by the way.
Yeah. Well, it also comes as simple math. If the S&P earns $2 a share and it goes down to 15 PE or 16 PE, you're in that 3,000 range. So people, they always wonder, well, how would it ever get there? Real simple. Earnings drop. It's real simple. Earnings drop, and your PE ratio drops, and you have a basic handle of math. So, you take, because there's factual reasons why these things go. These companies made a lot of money and the PE ratios went through the roof, and that's how you get high prices in stocks. But
Right.
if you're hiking interest rates, PE ratios generally won't stay up. And if you hike them long enough, the economy slows. And when the economy slows, the earnings come down. So you don't have to be from
That's
Harvard,
correct.
really. You know what I mean?
Well,
But
sometimes they
no,
hurt.
it's just timing. It's just all about time. It's all about
Yes.
time. So in other words, if you have no patience, you won't wait for this thing to occur, because, it takes time for the inflation to go crazy. It takes time for the Fed hikes to actually get to where they have to be. And it takes time after those hikes to slow this machine down. And
Right.
so everything is about patience at the end of the day.
But one
Hey,
thing I would like to add, because I am so pleased that you brought it up, and that's the zero DTE options, because they are having a big effect on intraday moves, on the larger type moves. And so I just don't think people understand them. So I was real glad to hear you talk about it. And
Yeah,
I
but
would
the ultimate ending to that story will be exactly what happened to Robin Hood. In other words, people are gambling, and what happens when people gamble is they lose their money, and when they lose their money, they go away. So this 0 and 1 day game that's going on, probably has a fairly short shelf life, because again, just like everyone going over to Robin Hood and hoping that GameStop goes to 10 million or AMC goes to 10 million, that game had an ending, and then when it ends, everyone's gone.
And so did Bed Bath & Beyond, by the way, and that was the
Yeah.
latest one.
Yeah.
And I was like,
So I wouldn't
That's
worry
sad.
about this 0 to 1 thing, because it probably
I'm
doesn't
not
have
worried
the
about it,
long-
but I think it's
Yeah.
really important that you
Oh, it's current.
discuss it.
Yeah, it's current.
Discuss it so that people are aware of what is really going on behind
Yeah.
the curtain, so to speak.
Yeah. Hey, Sonny, throw up some Sonny bands here, and let's hit a few markets and see before we close out exactly what things are going. And then Michael will encourage the people to call you so you can show them on the Elliott wave and the Fibonacci numbers what these markets look like from your vantage point. But okay, there's Treasury bonds. Okay, so Treasury bonds, because these are some of the big.
What time frame do you want to see them on?
Let's just use the 1 year. Let's say people aren't looking to trade these things aggressively on a day basis. Let's say they just want to know what the flow of action is. So on a short-term base, on the 1 years, it looks like it is down near the lower end. And
Look at this attractor we have right there. It hits over here a couple times, hits over here, breaks below that. Now it's trying to push it from the underside up. So if interest rates are up, bond prices are down, right?
Right.
And I don't see interest rates going down.
Well, you can get rallies in the interim, though. And what you're
Of
saying
course.
here is that you'd be on guard for a reversion rally because of the relative oversold nature of it.
Yes.
And so if you
And
did
we've
get a
got
buy
green
signal,
on
you
the
could.
histogram. We've got
Yeah.
green down here on the histogram.
Yeah.
We've got purple on top, which tells me we're going down.
Of
But
course.
we might have a little bit of a rally trying to get back up to there before it goes down again.
Yeah. Yeah. All right. So that's your T bonds. What about the price of gold, which Michael, everyone who's listening should talk to Michael because he follows it like a hawk. And it
does.
definitely, to me, is on the edge, because if we start breaking under 1800 or 1775, and we get some kind of continued Fed hikes, gold could have a lot of real estate to go on the downside. But if it doesn't, this is a neighborhood where there is a ton of support.
Yeah. And we've got, let's see, horizontal line. We've got attractors right exactly where we are right now.
Yep. Yep.
So I don't know. I'm a gold bug too. I'd like to see it go up above 2000.
Yeah. Well,
But
like I say,
that's my feeling, not my analysis.
Yeah. Well, it having, that 1975 area was no joke. And obviously you can see your big yellow dot there. So if you wanted to go and bet on 3000 gold, you might want to wait for it to break 1975.
Yeah.
That's the
But we
town.
did
That's
get-
the
look at
town
the-
it has to go through to get there,
Right. Right.
Yeah.
Look at the histogram. Just turned green.
Yeah.
That's
It
a
looks
buy
to me,
signal
it
right
looks to me like the stuff you're showing, it looks to me like the bonds may have a little bit of a reversion rally, and gold may
Yep.
as well, because,
Yep.
if the bonds do have a reversion rally, that will definitely take the foot off the neck of gold. And
Yeah, I
so that's
wouldn't be
why if you're
surprised.
short-term trading, watch for that very closely, I would think. Don't you think?
Mhm. I wouldn't be surprised.
All right, let's throw that crude oil up there, because a lot of people are saying that we're going to have a nice big spring summer rally in crude. Is there any evidence that even could be starting to happen?
Well, look at these sine waves, up, down, up, down, up, down. This is a interesting head and shoulders pattern, which tells me we could go on down to below this level. I'm looking for oil in the 70s.
Well, you're in the 70s. The question
Well,
is, are you
no.
going to get them in the 60s?
Yeah, no, I'm looking for it to go 270.
Oh,
right
270.
there.
Yeah, yeah. Because, you know, my long-term stuff, the big support is between 65 and 70. So
Hmm.
under that, then you've got a whole different thing to talk about because
Now, let's
obviously
look at
something's
this
happening.
weekly a second.
Yeah.
See, that's where we are on a weekly chart.
Yep. Yep.
And right there's the attractor. So that's at 69.34.
Uh-huh. What about
That's-
monthly?
That's where I think we're going.
Yeah. That's where I was getting my 65. Oh, there you go.
Right, right there's the attractor again.
Yeah. Yeah, it starts breaking under 70, 68, stuff like that. You know, that 55 and 45, you know, would shock everybody.
Mhm.
But you know, it seems to me like you get three things. You got the oil market in the 70 neighborhood. You got the gold market at that 1800 neighborhood. You've got the 10-year yield around 4% neighborhood. And those are neighborhoods that could reject those prices and give you a little bit of a, shall we say, a counter trend rally.
Yeah, and speaking to that, you see that my dynamic moving average here is flat. It's moving
Uh-huh.
sideways. That usually speaks to a counter trend rally.
One
So
last
it
thing,
could
real
bounce
quick.
right off
Yeah.
that.
Yeah. One last thing, because you were running out of time, is US dollar. Guy was making a pretty good case that buying
What's the
the,
symbol for that?
let's go with the DXY. And he was
I think
making,
it's $ DXY on trade.
It is $ DXY.
yeah. So he's making a pretty good, compelling case that the dollar index at 106 is it, and it's going to come down off of that, and that the euro could go up. If yields were to drop, it would make a lot of sense that the dollar rally could fizzle here. But what are you seeing?
Well, on the monthly chart, it looks like it's hitting an attractor and bouncing off of that right now. It looks
That's
like
what I had that 100 number ballpark,
Mhm.
102 as the, yeah. But let's look at the shorter term stuff like 1 year. Yeah, on a longer term basis, it looks like the dollar may have had its bottom and going to go up again.
Yeah,
Right.
and we're going to right there, whatever that is, 106.
Yep.
Yeah, and that's the neighborhood that he thought it would fail from. How about if you put up the euro? And does the euro at 105 look like it could be value? Because where'd that go? It went from 95 to 115, did it? Or what did the euro do? Oh, 110. So it went from 95 to 110, which is 10. If you took 6 off of that, you'd be at 104. Did it go down to about 104? Yeah.
Close.
So it's almost
Oh.
done a fib drop from the high to the low, and this is something that the guy thought was yeah. It would go if the yields were to back off for whatever reason, and whatever reason could be a CPI number that's soft, and a jobs number that's not good or whatever, and just get these people that are all short the bond market and short you know, these other markets to cover.
Okay.
You know, to
Agreed.
cover. Yeah, because the way the algos work, as soon as they find out there's no volume on one side of the trade, they put 9 million orders on that side, and they
Right.
just press it.
Big
So you know,
time.
yes. And where are there no orders right now? Well, there's probably no buy orders on the. Excuse me. There's probably no. If it turns, there'd be no sell orders because everyone's already sold. So that would be able to press that side. On gold, so on a short-term basis, everybody probably has gotten out or shorted it. So obviously, if they got news to make it rise, there'd be no sellers down there. And
Right.
so on a short-term basis, they could really press the other side of these markets because, you know, because they've come so far, the volume, you know, probably would dry up on the other side with any good news, right?
Yep.
So
I
that's
agree.
interesting. All right, well, we're at the top of the hour almost, so let's get into, again, reminding people who we are and what we can do for them. So let's start with Sunny, and again, just remind people again what you're doing down there and how you can help.
Well, I'm a mathematician and a professional trader. I've been trading for 42 years. I love to teach people how to trade and consult with them, mentoring them. I also do easy language programming, and I've written 6 best-selling books on trading. So I have Sunny Side of the Street every Sunday night, a live trading room on Tuesday mornings, and free podcasts. So give me a call. I'm at 760-908-3070. Thanks.
Perfect. And again, there's a lot to learn by going to Sunny and finding out how it might be able to fit into your research as well. Michael?
Hi. Again, Michael Filighera, and I do 2 updates every single. I do 1 update actually, but it's on the S&P and the NASDAQ. Those are the futures basis. And then I do a weekly big picture update, which is using all the cash markets. And those are all put on YouTube. And my channel on YouTube is Traders Helping Traders, but also just check for my name because we did have somebody hack the name. And so they're in there. Yeah, well, you know, life goes on. And then also I have logicalsignals.com. Both of those kind of will direct you over to the YouTube, but they also direct you to some other things that I do. I do offer coaching, and I do have a trade room. And again, as I suggested before, we are revamping that trade room. It'll be myself and Dan Ascani. For those of you who don't know Dan, he is a very accomplished analyst, Elliott Wave analyst, but he's also a very accomplished trader as well. And so we are once again joining forces, and we're producing our analysis together. We're doing podcasts together. He has 500 years of data on gold. So that would be someone that you'd want to get on the show together with you, Jim, and really talk about gold. You would get inside out story on gold, and you could do an hour and that wouldn't be enough time. If people want to get a hold of me, you can by emailing me at michael@mjf1partners.com. I always answer my emails, and so you can ask questions or you can inquire about any of the services that I do offer.
Okay, great. And as far as Option Professor is concerned, we do have a website you can go to, Option Professor, OPTION professor.com. And we have some PDF reports that explain all the different ways of using the options. But the most important thing is we have a one-on-one online review where we share our knowledge of 40 years of doing this stuff. So there's a likelihood we probably know something that you don't. And also we review stuff that you're doing, and we give opinions. We don't give advice, just opinions. So optionprofessor.com, plug your information in and we'll check back with you. All right. Thanks a lot, Sonny. Thanks a lot, Michael. And we're going to swing it right
Jim.
back.
Thank you.
Oh, you bet. And I think we obviously covered a lot of stuff, and I think we may have identified a potential turning point on some of these things. We'll have to see how it plays out by the end of the week, but I definitely would watch some of these things we were talking, because it does look like they're at pretty critical areas. So that's good stuff. All right, I'm going to send it back over to David. And again, thanks everybody for listening.
All right, another great discussion today. So just a quick reminder to everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Also, Timing Research updates are now available on Substack if you have Substack. Just want to thank my guests again for today. Sunny Harris of moneymentor.com, Michael Filighera of logicalsignals.com and tradershelpingtraders.com, and the Option Professor of optionprofessor.com. Thanks, everyone.
Thank you.